Picture this. Back in 2016, you could buy a house for 664 Bitcoin. Fast forward to today, and that same house is yours for just over 4 Bitcoin. That's not a coincidence. It's a sign of a dramatic shift in the value of money, and Bitcoin is at the center of it all. Major institutions like BlackRock, Fidelity, and countless companies have already started incorporating Bitcoin into their strategies. But the big question is, will you? In this video, we're going to tackle some of the biggest myths surrounding Bitcoin, explore its place in a diversified portfolio, and break down whether it can really help you reach your financial goals. Welcome to Sage Investing, bringing you timeless investing wisdom. If you're looking to improve your investing knowledge, make sure to subscribe and hit the like button if you found this useful. Now, most people look at Bitcoin and see its price continuously going up against the US dollar. And while that is true, they're looking at it the wrong way. Here's what's actually happening. 1 Bitcoin is still just worth 1 Bitcoin. The thing that's actually changing is the value of the US dollar. It's getting weaker compared to Bitcoin. And when I say weaker, I mean a lot weaker. Why is that? Well, since Bitcoin launched in 2009, the US has printed a massive amount of money. This means your dollar just doesn't stretch as far as it used to, especially when you compare it to Bitcoin. Since 2008, the US has increased its money supply by around $13 trillion, which is a huge 168% jump. That works out to an average annual devaluing of about 8% per year. And it got even crazier during the COVID-19 pandemic, when the money supply grew at an insane rate, with a 27% spike in just 1 year alone. So, while it may seem like your Bitcoin is constantly increasing in value over time, what's really happening is that the US dollar, the thing you're using to measure Bitcoin, is actually getting weaker over time. In fact, Bitcoin isn't just outperforming the US dollar, it's actually beating pretty much every other asset when priced in Bitcoin. Take the S&P 500, for example. It's been on a historic bull run for over 15 years and is still hitting all-time highs in dollars. But when you price the S&P 500 in Bitcoin, well, it's a whole different story. It's down massively, and there's no sign of that trend reversing anytime soon. Here, you can see it on a logarithmic chart, but even without that, the S&P 500 in Bitcoin terms would look like an almost vertical drop. Many people misunderstand the true purpose behind Bitcoin. Unlike the thousands of other cryptocurrencies that have emerged since its creation, Bitcoin wasn't designed as a speculative gamble. It was created to address a fundamental issue that has eroded the value of money over the years: currency debasement. Through groundbreaking technical innovation, Bitcoin solved the infamous double spending problem, something that had stumped digital currency attempts for decades. In a traditional system, digital currencies can be easily duplicated and spent twice. But Bitcoin's unique design uses a decentralized network and its immutable blockchain to prevent this from ever happening, ensuring that every transaction is secure and irreversible. This solution was nothing short of revolutionary, securing the integrity of money in the digital age. So, what gives Bitcoin its value? It all stems from 2 core features: its decentralized nature and its fixed supply, both of which are underpinned by the most powerful computing network in existence. No central authority can control Bitcoin, and its scarcity is guaranteed by an ever-growing network of so-called miners, securing it through computational power. Essentially, miners solve complex mathematical problems to keep the system secure, and in reward, they receive a set amount of Bitcoin for doing so. Let's take a closer look at the scale of the network over time. Here, Bitcoin's hash rate represents the total computing power of the miners used to protect the Bitcoin network and validate all of its transactions. A higher hash rate means a more secure network, making it nearly impossible for anyone to compromise or alter the code, since it's all governed by math. To give you a sense of the scale of it all, the Bitcoin network hashes approximately 67 times more calculations per second than there are grains of sand on Earth. And if every person on Earth performed 1 calculation per second, it would take roughly 2,000 years to equal Bitcoin's current hash rate. And yet, despite these astounding figures, some skeptics still claim that Bitcoin is backed by nothing. But the story doesn't end with security. Bitcoin's value is also driven by its fixed supply, capped at just 21 million coins. This scarcity is built directly into the code, ensuring that no more than this amount will ever exist. Unlike fiat currencies, which can be printed at will by governments, Bitcoin's limited supply makes it resistant to inflation and preserves its purchasing power over time. Now, you'll hear people say that Bitcoin is too volatile. And yes, that's true. It's definitely a wild ride. The price in dollars can swing up and down pretty dramatically in short bursts. But here's the thing. It's that very volatility that drives its impressive returns. The stock market, it's the same story when you zoom in on shorter time frames. You've probably heard the saying, if in doubt, zoom out. And when you do zoom out and look at the bigger picture, the numbers speak for themselves. Historically, if you've held Bitcoin for 4 years or more, you've always seen positive returns. In fact, right now, 95% of Bitcoin's supply is in profit. When you take a look at Bitcoin's annual growth rate, especially when compared to traditional assets, you'll see that it's really in a league of its own. Over the past decade, Bitcoin has been delivering an insane annualized return of over 100%, far outpacing other major assets like stocks, gold, and real estate. Now, if we compare that to the S&P 500 and NASDAQ, those are sitting around 13 to 14% per year, and gold's only at about 8%. And during those massive bull runs, Bitcoin has been known to surge by several hundred or even thousands of percent in just 1 year. It's a level of growth that's hard to match anywhere else. So, where does Bitcoin fit into your portfolio? Well, even a small allocation can make a big impact. Studies have shown that adding just a little bit of Bitcoin to your investments can seriously boost your returns. For example, if you had put 10% into Bitcoin and 90% into the S&P 500 over the past 5 years, your returns would have been 37% higher per year than if you'd stuck entirely with the S&P 500. And it's not just me saying this. BlackRock, the world's largest asset manager, suggests that a modest 1 to 2% allocation in Bitcoin can help with diversification without taking on too much extra risk. In a world where most markets tend to move together, Bitcoin stands out as a rare opportunity for returns that are uncorrelated with the rest of your investments. And given Bitcoin's volatility, a smart way to manage the ups and downs is with a dollar-cost averaging strategy. By investing a fixed amount on a regular schedule, you can smooth out those price swings and avoid the risk of buying at a peak. It's a simple but effective way to stay in the game without stressing over short-term price moves. Adding Bitcoin to your portfolio isn't about taking a gamble. It's about embracing a new asset class with immense potential. It's a bet on technological innovation, financial sovereignty, and the future of money. Sure, it's not without its ups and downs, but with the kind of rewards it can offer, it's definitely worth a closer look. So what do you think? Is Bitcoin the missing piece in your portfolio? Let me know in the comments below, and I'll see you in the next one.